Welcome back, Jim.
I am delighted to be here, Goldseek.
In recent weeks here, you've been concerned about this employment report. You've gone so far as to say as this whole thing was made up. Tell us what you think about the U.S. government's unemployment report.
Well, the last one, at least the last one I saw, if you went through it line by line, you found that nearly everything showed increased employment, including things like construction. The way they do that, they have something called birth and death adjustments, and they can adjust it any way they want to. Now, you go through those various categories of employment, and for the life of me, I cannot see how they had increased employment in any of the fields. Well, I mean, they come up with all sorts of adjustments and made it look much better than it probably is. Now, I didn't go out and count it myself, so I can't dispute it on that basis, but I can dispute it on the basis of logic and knowing what's going on in the world.
You know, we're sitting here, 9.4%? Those are the official numbers. A lot of folks looking for 10, 11% unemployment domestically before summer of next year. That doesn't sound like a statistic that bodes so well for these green shoots and a recovery, does it?
Well, I've been watching government numbers for a long time, and I've learned enough that one should not pay too much attention to them, if anything. And I don't mean just U.S. government numbers. I mean governments all over the world. They all have learned how to paint a rosy picture, and they do so. And even when they do paint the rosy picture, they usually adjust them again next month and the month after and the month after. So anybody who uses government figures to invest is probably wasting his or her time, is going to lose a lot of money.
You've talked recently about how governments are flooding the world with money. You talked about not shorting the market, but just as equally, you're not very interested in equities at this point, that you're more turned into the agricultural and commodities sector.
Well, I always like to have some shorts as a hedge, if nothing else, because who knows what's going to happen in the world. And I don't work nearly as hard as I used to, but these days I don't find things that are blatantly overpriced or where they're wild excesses. I'm sure there are some things. I'm just too lazy to find them. So I don't have any shorts right now of anything. I'd like to be short the U.S. government bond, but even that, with Brian Mankey saying he'll buy them till we run out of paper, it could be dangerous to do that. So I'm not shorting anything. I do think that the best place to be is in commodities because they're printing huge amounts of money all over the world and because, supply problems are developing, continuing to develop in nearly all commodities.
No, I agree with you. I actually went long the long bond just as a rebound trade in recent weeks. You've been talking also about food inventories, about droughts and things of that nature around the world. It looks like it's going to be a bigger problem in the years ahead. Do you expect these climatological changes and shifts to keep adding wind to the sails of the agricultural sector?
Well, we've had climate changes for a few thousand years, a few hundred years, any kind of time you want to measure. And so it's always been happening. We seem to be having climate changes now. We've had some strange things. We had snow in Saudi Arabia recently, not in the winter, but recently. I was in the United Arab Republic not too long ago, and they had snow, and they didn't have a word for it in the local language. Nobody had ever heard of snow or knew anything about it. So we do have some strange things going on in the weather around the world. I don't know how it's going to come out, but if it continues to change, it's undoubtedly going to have an effect on agriculture most of all. So that, among other reasons, is the reason I own agriculture. Well, I take that back. That's not the reason I own agriculture, but I do own agriculture for many reasons, and if things continue to develop with climate change, it'll just make it better.
Snow, that's a big change there. I wanted to ask you a little bit about In a Gift to My Children, A Father's Lessons, your latest book. And you talk about trusting in your own judgment. For instance, China's potential. You saw this almost 3 decades ago, and that was several decades ahead of most folks. Are you remaining bullish on Asia and particularly on China, Jim?
Well, certainly compared to the rest of the world, yes. The reserves are in Asia now. The assets are in Asia. The largest creditor nations in the world are China, Japan, Korea, Taiwan, Hong Kong, Singapore. I mean, this is where the money is. This is where the assets are. So even if things continue to get bad, and they probably will, or they may, I'd rather be in Asia than in many other places. Debtors in times like this usually don't do nearly as well as creditors.
Good point. And, as far as China is concerned, though, as our number one creditor, they're growing more and more concerned about the value of the greenback and those U.S. bonds that are denominated in dollars. Do you think that they are making a good point here, and how can we use this to help our own investments?
Aren't you concerned about the dollar and the U.S. government bonds? I am. I hope you are. I hope everybody listening is. I wish everybody were, because it's a serious problem. Not just the Chinese. It's all over the world. People are looking around saying, hey, something's wrong, and what do we do? So, yes, one needs to be aware that America is the largest debtor nation in the history of the world, and the debts are getting worse. I mean, they're going up, is what I meant. So one needs to prepare themselves. I'm not short the dollar at the moment by any stretch. I still own some dollars, but somewhere in the next few weeks, months, years, who knows, it's going to be time to be totally out of the U.S. dollar and protecting yourself with other assets, whether it's real assets or good currencies or whatever. One needs to be somewhere else.
But do you worry at all, Jim, about the credit side of the equation? You know, as an inflationist myself, for years now, we enjoyed, 8 years of rising gold prices and many other commodities. But fast forward to 2008, crashing credit, that still seems to be going on, at least somewhat behind the scenes. Could that put the inflation theme on hold for a few years?
Well, a few years, I don't know. I doubt it. The U.S. government, the Bureau of Labor Statistics, most recent inflation numbers, again, if you'd gone down line by line, you would have seen that nearly everything in there, even the government, had price increases year over year. The only thing that kept the overall number down was energy. I mean, even the government sees prices going higher. Your problem is that your butler does all of your shopping, so you don't see that prices are going up for everything. But the rest of us know that prices are rising, except for energy. But by the way, when energy prices were going up, the government said, oh, it doesn't matter, it doesn't count for inflation. And now that they're going down, they say, oh, that's what's keeping inflation down. The government numbers are pretty rigged. Again, as usual, you should ignore them. We do have inflation. It's not as bad at the moment as it has been, but it's going to continue to rise. And I don't know many things where prices are down in the last 2 or 3 years, certainly not in the last 5 years. If you know, please tell us all, because we'd like to shop where you shop.
As we wrap up here, folks listening to Gold Seek Radio, well, they'd love to hear the king of the commodities markets view on the precious metals. Last time we talked, you thought they were becoming a better bargain. Who knows how much more gold they can keep dumping on these markets, the powers that be. And we continue to consolidate here in this 1.5 year long trading range. Looks like we're winding up, at least from a technical perspective, for a breakout above 1,000 to maybe 1,300 on the next stop.
Oh, sure. Yeah, I own gold and silver, and I own them all. If gold gets knocked down, I hope I'm smart enough to buy more. You know, the IMF is still sitting out there trying to sell its gold, and they own a lot of gold. I have no idea what's going to happen if they sell it, and if they sell it, whether it will go down or not. But if something knocks it down, I hope I'm smart enough to buy more.